here in Islamabad, in Ireland, in Brussels, in Switzerland, and a few others may join us as we start this. Today we are celebrating, it's a kind of virtual book launch for Activist Retail Investors, the book. The format is that we should keep it to an hour. I will begin by doing a short presentation. This is specifically for the CAS team. In the CAS team Zoom, you can see, to bring them up to speed with what we have been working on as a joint effort, a very successful and wonderful effort. And after that, I will invite Sven to share his views. After that, I will invite Chohan and Ilker to share. And the fundamental questions are, what was your chapter about? What was the experience of writing this book? And where do you see YOLO capitalism or activist retail investors going forward? So with that, I will just share my presentation. And it's a lighthearted presentation. So can everybody see this? Yes, I see a thumbs up from Chohan. Thank you. So the title of our book, which was upon the insistence of Routledge, was Activist Retail Investors and the Future of Financial Markets. So I have to go to this too. And today we're having this event for it. There's some terminologies that I want to share with the audience. Retail investors means the little guys. This means people like you and me who have online accounts and we purchase at a small scale. Activist investing implies that it is driven by a cause. The cause can be as large as challenging financial hegemony. It's a big deal. So little guys fighting the big guys in finance. That is the dynamic we're studying. YOLO is the term used by young people that you only live once. And it's a sort of die-hard approach that go in, go big, or go home. So you only live once, you fight this hegemony of institutional finance, and you go hard on it. Robinhood is an app that is popular in many countries where you put an account and then that's what you use to trade. Reddit, many people already know, is a set of online forums, and one of them of particular interest is Wall Street Bets. So this is a forum where people come to share ideas, to get a sense of community and participate in things. And this is a vehicle for mobilizing people to do investments. Meme stocks is a certain culture that involves the humoristic messaging about stock market investing. You do it in a lighthearted, self-deprecating manner. So if we culminate these terms, what we get is retail investors, the little guys, using Reddit as a common area, common space to mobilize using apps such as Robinhood to buy and sell in manners that can be disruptive to institutional finance. The image on the right that you see is from 1904, and it's Jack and the Wall Street Giants, and it's essentially this theme. And it's almost timeless in that sense. The background to this is that after the 2008 financial crisis, the large institutional players on Wall Street got a nice bailout, and they went virtually unpunished for it, even as the American economy began to hollow out in many ways. What we're focusing here is on the retail investors of today and their age in 2008. They were very young. Because they were very young, they also felt very powerless at the time. They saw their parents lose their jobs, their homes, and they were suffering. So there was an element of inequity in the way that the institutional players were bailed out, but the common person suffered. And this trauma lingered on as this generation, which is called Gen Z, came of age. A similar and even larger situation of bailout occurred in 2020, where a lot of money was given to institutional funds, and a small portion was given as stimulus checks to the public. But by and large, the stimulus was meant for corporations to keep the economy afloat, even as economic activity was paralyzed by the pandemic itself. So in this context, having seen the 2008 crisis suffering, being in lockdown, getting a stimulus check, having mental afflictions, including depression, anxiety, and being in a sense of loneliness, connected through Wi-Fi with the rest of the world, how do you deal with life? Well, the monetary element in people's lives became that they began to use apps such as Robinhood to buy and sell stocks, but how they went about it was Reddit became a place where many people congregated on many different topics, including personal finance, and Wall Street Bets was the forum where they congregated to get ideas. A lot of it was very childish. A lot of it was just hunky-dory stuff until a particular person, Roaring Kitty, came up with the idea that we can actually, if we study GameStop's stock, we look at how Wall Street is short on this so much, which is to say that their bet is beyond the mathematical possibility of shorting this stock. They're so negative about it. What we have to do is purchase this stock. It's also a stock that we have an emotional attachment to. It's called GameStop. GameStop in other countries is a place where you buy video games. So many people who had gone through this trauma, Gen Z, bought their stocks, bought their video games through GameStop. They would go there as children with their parents and buy things. So they had a personal attachment to it. They began to understand the logic of what Roaring Kitty, this user, said. And they said, this is a great idea, on the financial merits also. And given that so many institutional funds were going short on it, they went long on it. They began to buy its stock. And as a result, they hemorrhaged big hedge funds. And they also got a thrill out of it, that they stuck it to the powerful person, they stuck it to the man. And in the process, they also made money. So the losses were about 70 billion for institutional finance. So it was quite a remarkable event that took place in 2021. And this was the genesis for us to start working on this book and invite very brilliant authors from around the world to contribute to it. As a result, what we were looking at is the sociology, the psychology, the economics, personal finance, the public administration of this community of activist retail investors that was going about having a ball of a time in a sense of solidarity, coping with how capitalism has emerged, lingering with the traumas that they had, and behave in a manner as the Planet of the Apes. If you've seen the old or the new movie, the apes together strong, the sense of solidarity. So a new movement has emerged in finance, and it is not just confined to the United States. We see echoes of it around the world. And so how do people like you and I, who don't have millions of dollars, generate high returns? Well, we put our money together and then we actually have billions of dollars. And that is the remarkable counterforce that we're experiencing. That is what the book is about. For our Air Force colleagues, I see the metaphor of the swarm of ababil taking down the elephant army. It's the same dynamic that this swarm of little things took on the big things. So where to from here? Well, there is still, as we speak today, and I'm gratified by this, an increased importance of retail investors, for example, in these bank failures that are happening right now. For example, in other events, they are still relevant, and this mindset hasn't gone away. So therefore, what we did with it, we got 14 great authors from around the world to write 14 chapters. It's 103,850 words from various disciplines. So it's a very chunky piece of literature. And we're all very proud of this. And just to give you an indication of it, the diversity that we have in terms of geography, in terms of gender, et cetera, and nationalities covered, and certainly in terms of the disciplines covered. And many chapters were in fact interdisciplinary, so we don't create a chart of that because we double count a lot. That is what this wonderful project has been. And so now I invite Sven to take it from here to share his perspectives. Sven, over to you.
Thank you, Usman, for the great introduction, and thank you for joining our online book launch. I think it would only be fair to start with thanking especially you, Usman, for getting this project off the rails, as well as all of the authors. As Usman already indicated, they came from everywhere in the world. But I think even though we might have come from a wide variety of places, the whole process itself went rather easy. And I think it has led to what I think is a very timely publication. It is a field that has not yet attracted so much attention. And I think and I hope that this edited volume will be a good starting point to continue looking at these things in the future. So maybe I will just add a few points to what Usman already shared with you. I think one of the first things that we need to be clear about is that the book and the content in the book goes a bit deeper and farther than what is called activist retail investors. Many of those who were involved in what could actually be perceived sometimes as extreme speculation that we've seen in the recent years, not just the Gamestop short squeeze, but also, for example, NFTs, cryptos, and so on, which is also covered within the book. They might have had this, what Usman already indicated as well, like the affiliation with, let's say, what happened in 2008 and happened in 2020, where the idea was to, let's say, stick it up to the financial institutions. But quite a lot of the people who participated in any of these kind of events, the GameStop short squeeze, of course, is the prime example that has led to the creation of this book, have also done so out of the potential for extreme financial gains. And I think it's very clear that when these things happen, it's a bit difficult to time your interaction. So if let's say there is extreme volatility, as we've seen, for example, in the GameStop short squeeze, where a stock which was worth a few dollars all of a sudden went up to more than $300, $400 even. If you time your entry and your exit very well, you might have been able to amass quite some wealth. However, timing this is extremely difficult because the prices changed pretty much every half an hour. I mean, every minute actually, but I mean, let's say the bigger movements. So it also means that quite a few of those who might have done this out of, let's say, more activist ambitions, as well as those who might have been looking more for financial gains, might also have been holding the bags when the bubble, let's say, would burst. And I think that's also something that we need to be careful about when we talk about, especially this edited volume. It is talking about this YOLO capitalism movement sometimes more than this activist retail investors, meaning that essentially people were perceiving this more as gambling to some extent, wanted to feel the thrill and the excitement, also spurred on by these online forums. But some of them might also have lost quite significant amount of money in doing so. I think the second point, and that is something that I think both Usman and myself would agree is a good thing, is that this GameStop short squeeze and all of these related events have also led to an increase in financial literacy. As this whole thing actually hits major news outlets all over the world, people have been reading more about it, have been educating themselves. And I think this is also in line with the ongoing trend of people getting more involved with stock markets, with investing and so on, which I think is something that is a positive evolution that we're witnessing. Speaks a little bit towards, let's say, this whole FIRE movement, financial independence, retire early as well, where people would also be encouraging each other to invest in the stock market. But those people would actually focus more on, let's say, the almost risk-free assets, whether it's obligations or where it's investing into funds. Whereas what we've seen here is that people really invested in extremely risky and volatile assets, whether it's about the GameStop short squeeze, whether it's about NFTs, whether it's about cryptos and so on, which of course hold the premise or the potential for huge financial gains. But I think what we miss in this whole discussion sometimes is the fact that they also come at serious risk levels. And that might be something that, even though we've seen a rise in financial literacy, might be something that quite some people might be underestimating. A third point that I would like to make, and that is also part of the chapter that I co-wrote with Sean, who was also in the meeting here, and we will also talk in a few minutes, is that we've seen the rise of these online communities. And I think the most interesting and the most amazing thing about these online communities is that essentially they have no carrot or sticks, right? You're just posting by using whatever username that you make up. You're just engaging with other people mostly through the forms of memes and jokes, so to speak. But still, they were able to instill some kind of discipline within their participants in these forums, but have essentially led to what we've seen, meaning even the bankruptcy of some of these huge hedge funds. So it's really interesting to see how some of these forums, which are, let's say, mostly intended for entertainment purposes, for engaging in the thrill more than, let's say, real financial due diligence, even though that's also to some extent part of it, have become, let's say, powerhouses in being able to move stock prices. And I think that then yet again speaks to the small many might be able to beat the few huge ones. And I think this book is very timely because even though the Gamestop short squeeze and the way it played out might have been the most massive outing we've seen in this regard for quite some time, and potentially we might see for quite some time coming as well. But it's clear this is not a one-off example, whether it's with NFTs, crypto, other investments in the meta world, stocks. We've also seen more recently the Bed Bath and Beyond involvement of retail investors in that stock as well. It means that people also actively participate in financial markets. They also see that they're able to potentially move prices, even though they don't have the same access to the information that some of these bigger institutions might have. But they also seek the thrill and the excitement of engaging in what are potentially very lucrative investments, but with risk levels that might not completely be well understood by everyone. So I think even though most of the authors would agree that a higher engagement of people with stock markets, with investments and so on is a very good thing, and that the proven ability now to be able to act in unison and have some, let's say, impact on the way stocks moves, it is also very important to warn against overexposure of some very volatile assets. I think this will be discussed in more depth by some of the authors, which are also here in the call, which I would of course like to thank for their contributions and the great cooperation, because I think this book actually matured quicker than both Usman and myself initially envisioned. So really thanks for all of the work you've done on this. And I think without further ado, I would like to give them the floor. Back to you, Usman. Thank you.
Thank you, Sven. I want to apologize to you because maybe I was a bit too informal. I should formally introduce who you were to the CAS researchers. So Professor Sven Van Kerckhoven is at the assistant professor in business and economics at the Brussels School of Governance at the Vrije Universiteit Brussels. And he's also the vice dean for education there. He's also a professorial fellow at the United Nations University Institute on Comparative Regional Integration Studies. His PhD was in applied economics from KU Leuven, and he's been a visiting professor there as well. And he's done a lot of interesting publications, particularly in the areas of international trade and the global economy. He is like a brother to me, so I didn't even bother to introduce, so I apologize for that. And now I would like to introduce Sean to speak next. And Sean is an adjunct professor at the Brussels School of Governance and at Trinity College. He's a social and cultural anthropologist who is interested in topics of Irish identity, mobility, and diaspora matters. He recently published his first book, An Anthropology of the Irish in Belgium, Belonging, Identity, and Community, with Springer. Over to you, Sean, and welcome.
Thank you very much indeed, Usman and Sven, for having me. And yeah, let me congratulate you on a very fine and thoughtful volume. So the first thing I should say, I suppose, is I should apologize for my colleague who couldn't be here today. I co-wrote the chapter for this volume with a peer, Dr. Sean Winkler, who is in Los Angeles at the moment and couldn't connect in time. So he wanted me to convey his apologies. So the title of my text was Memes as Cultural Artifacts, YOLO Investors, Degeneracy, and the Memeified Economy. And I think rather than demonstrating how important memes are, I could just actually return it to what we've all seen already. In Usman's presentation, there was like a glut of memes, and it was just phenomenal that you were able to contain and compress so much information in that. Like, you took us through the 2008 financial crisis, through the COVID pandemic, in a series of memeified and sort of stock photos and stock images of destitutions. And to be honest, I think that this is the power of memes, as well as both yourself and Sven have alluded to, the energy that they commit and convey, how it is that they can be purposed so easily to get people excited and on board, and to generate a feeling of not just solidarity, but like a shared and common destiny in a way. So the text basically asks, okay, if this is what memes can do, what are they? And we just had to just kind of actually try to interrogate this idea that's so immediate and so obvious, and it's so it's just endemic to Wall Street Bets. This is how people talk on that website. They also talk through memified avatars. We've referred already to Roaring Kitty, for instance, but haven't used his real name, Keith Gill, because it's just less interesting. And his memified avatar is much more exciting and conducive to, like, it seems preposterous. You know, it just seems like the people who were behind the GameStop short squeeze managed to pull off this massive coup, even though they're ridiculous, which is why sometimes YOLO investor has a negative connotation. Sometimes these people are referred to as degenerates, because while they mimic very, very closely normal investment procedures, they do so with a level of technological sophistication that is much lower, much less dependent on algorithmic thinking and so on. So what is a meme? No one really knows. The inventor of it, for instance, in 1976, the first person who coined the term meme in the popular imaginary is Professor Richard Dawkins, who in 1976 said memes are and possess three things. They're typified by fecundity, how much people spread them, longevity, how long they last, and copy fidelity, which is how it is that you can change the original meme into something new, either through texts or manipulating the image, but in such a way that it's basically recognizable, like to the original. What followed then was a kind of a weird period in Dawkins's thinking, where he eventually said that everything was a meme. Common sense, the notion of God, the possibility of an afterlife. And so the term really lost its meaning, and it was repurposed by people in a sort of a common sense way to just mean a way of communicating information in the shorthand that Dawkins so disliked. He actually abandoned the term, and he said, I disown this term. And this kind of recapturing by the little guy is very, very indicative, in my view, of also what happened with retail investors and YOLO investors and so on, that it was possible to find a way to eke out a space where no one has collective ownership over these ideas. There's no one way to do them properly. And that's really the strength and the sort of the freedom in it. So the text just investigates that and different anthropological applications of the idea, returning eventually to where we began in Wall Street Bets. And I think it's a fascinating question to ask what happens next, because I mean, that's what's very timely and very, very interesting about the piece. But unfortunately, there was no way really of predicting this in a manner of speaking. And so it's really, really difficult to determine what happens next for the same reason. But we've seen things already, like Robinhood closing ranks when there was a lot of pressure applied to it, that this communal trading app wasn't as communal as it claimed to be originally. It wasn't as accessible, and other sort of slightly odd or curious tactics. But I think that the existence of Wall Street Bets, Wall Street Bets itself, the Reddit page is more restrictive in a lot of senses than it was previously. You can't just jump in at any point and sort of offer your opinions and so on. But what's always very heartening about it, I think, to be completely honest, is the fact that YOLO investors are more candid about their losses than about their gains. They're equally candid. You know, it just seems random and capricious, all of these kinds of movements. And so I think keeping a critical eye on memes, how they're deployed and what they mean is going to be extremely valuable. And I think that watching retail investors do exciting things and trying to keep pace with that is very exciting as an author and as a potential contributor to a future volume on the same thing. Anyway, so that's my time. Thank you very much again, indeed, for inviting me. And I look forward to hearing about everyone else's contribution and eventually reading them as well. Thank you.
Thank you very much, Sean. Now I would like to invite Ilker Aslan. Dr. Ilker is a Turkish-Swiss economist and works at as a management consultant in Zurich, Switzerland, focusing on the insurance industry. And his research area is economic theory, risk management, and monetary policy. And the three of us, Sven, Ilker, and I, co-authored the chapter. So I invite you, Ilker, share your wisdom. And by the way, Ilker is also a hyper-polyglot, and he's part of Hypea. So we have this connection too. Go ahead, Ilker. Welcome.
Yes. Maybe we can do the we can do the next presentation multiple languages instead of English. But thank you very much, Usman, for kindly inviting me into this endeavor. I would like to go back to a few points that Sean made earlier in reference to meme stock investments. When I look at this phenomenon, I really see many parallels with anarchist movements, especially in anarcho-syndicalism and overall in anarchist movement in general. Because as much as the investors were using memes as a signifier of common destiny, what make this possible is that they now have a proper venue to communicate their endeavors, their wishes for activism on a platform. Back in the day, we didn't have these internet technologies of Facebook, Twitter, LinkedIn, or Reddit in general. But now you can really outreach to millions of people to coordinate such efforts, and this is really what makes what creates a multiplier for such a quote unquote anarchist movement. In irony, using means of capitalism as well to combat against the excesses of it. And just like you said in your presentation earlier, the small time investors, these are mainly Generation Z, Generation Y, really young demographics that are internet savvy. You're not going to find many investors who are in the older demographics willing to invest, risk in such meme stocks. And the in the future, I really see more events like this happening. People betting on meme stocks with a few caveats, though. Let's bear in mind that this short squeeze for GameStop really happened during the pandemic, where there was a lot of money laying around there, a lot of capital stimulus being pushed by the governments, and back in those days, the inflation rates were a lot lower than what we're experiencing at the moment. Right now, we're living in a very high inflation environment, not only in developing worlds, but also in developed worlds. In the first world, the interest rates in the U.S. last time I checked is around 5.5, almost hitting 6% on retail markets. Even in traditional low inflation countries like Switzerland is experiencing interest rate hikes by the central banks. So even though I expect such events to happen, like GameStop, I would be surprised to see more of them happening in a high inflation environment. Namely because the risk is too high and there's not that much money laying around. There are no longer stimulus checks being sent by the U.S. Treasury or et cetera. And but this doesn't mean that the people are not going to do this. Maybe at a smaller scale, they will pick up other stocks. But the question is, coordinating it, as Sean said earlier. There's no central coordination body to pick which meme stock will happen. So it becomes kind of a self-fulfilling prophecy in a way. More people joined GameStop activist investment because they followed on Reddit, and they started following Wall Street Bets on Reddit, and more people kept joining in. As long as it's fun. I mean, if you got like $100 or $1,000 or a couple of $1,000s to lose, if you can afford to lose it, no problem. But it becomes really a devastating issue for those who put their life savings in there. And I've been following the threads on Reddit, and people are very candid about their losses. They would write comments like, "Oh, I lost $20,000, but no worries, I'm putting another 30 just to mess up with those Wall Street guys." So if you can afford to lose it, it's an investment at the end. There are risks and gains in such volatility, high volatility environments. People can tolerate them. It's not like you're investing in government bonds, and which is like watching the grass grow over the course of years. So you can lose a lot of money and win a lot of money at the same time. So I wouldn't personally, I wouldn't invest too much into it, but it's a fun game to play with. it's certainly better than playing video games, in my opinion. There's much more of an adrenaline, and then you really see the impact right away. But like I said earlier, the question is just picking the right stock at the right time, which is really difficult. But if you like messing with the hedge funds every now and then, it's a nice game, as long as you quote unquote fight together, ape strong. Because as an individual investor, there's no way you can really fight against these high frequency traders who are trading trillions of stocks per second. There's no way you can beat the algorithm alone. You can only do this when you have several thousand or tens of thousands of people acting in unison. So that's what I have to say about this.
Thank you.
Back to you, Usman.
Thank you very much, Ilker. I'd like to welcome Scott. Scott has to leave a bit earlier. So Scott, if you're there, welcome. Scott Timcke is a research associate at the University of Johannesburg Center for Social Change, where he studies the overlap between algorithmic capitalism, fintech, and neocolonialism. He has held fellowships at the University of Leeds Center for African Studies and the Center for Advanced Internet Studies in Bochum, Germany. I also want to congratulate Scott on his new book, The Political Economy of Fortune and Misfortune. And also your previous book has gone into open access. We're definitely going to get a copy. It is titled Algorithms and the End of Politics. So welcome, Scott. 3 short questions for you. What was the experience of writing the chapter? What was your chapter about? And where do you see this going forward?
Well, thanks for that introduction, Usman. I mean, before I get into those questions, I do really want to say thank you both to you and Sven. I found that you were incredible, had incredible editorial vision, and your ability to conceptualize, bring together the strong set of contributors. When you look at the volume and you go through it, like there's a sequence, there's a logic, and then your bookend chapters, both the introduction and conclusion, sort of very much well lay out both the stakes and the nuances and even the contradictions of this phenomenon. And I think that's one of the things that sort of fascinates me the most about this entire event. Well, I think it's a good the event is a good type of description of this GameStop short squeeze, is the type of contradictory elements of it. We have sort of the spectacle of accumulation. We have it's the attempt to target the system itself. We have collective ritual. We have we have sort of individualistic logics about one's own losses and one's own gains. I think these are the things that sort of like bring a lot of interest to the project, and ones of a similar kind of nature. So my chapter sort of is very sort of small in character. It looks at effectively the differences between Bloomberg terminals and platforms like Reddit that coordinate this type of market activity. It's in many ways, it's talking about anti-system politics, about the types of people who have been marginalized and feel that they don't really have a stake within contemporary political life, and are then subsequently trying to target that system. At the same time, there's a little bit of some sort of contradiction, because people are more than willing to push back, but also wanting to sort of exploit a system that they see is not really generating any goods for them. And so I think this is I come back to like questions of the contradictions, antinomies, differences, nuances. Yeah, this is the real texture of this kind of project. And again, just to answer your third question about what was the experience writing it, I mean, sort of all chapters are sort of straightforward, but when I had the book in my hand, I got it about 2 weeks ago, you really sort of see these textures, the complexities that I sort of mentioned. I really sort of like that. I think that the experience for me, the best experience of the book is going to be reading all my other fellow contributors' thoughts on the matter. So again, I end with thanking you two for putting this together, and I really hope that there's a volume 2 somewhere down the line. Thank you.
Thank you very much, Scott, for your kind words. It is a collective effort. Finally, I would like to invite Professor Nizan Packin. Professor Nizan Geslevich Packin is a professor of law at Baruch College, City University of New York, and senior lecturer at the University of Haifa's Faculty of Law. She researches and writes about financial regulation, fintech, ethical implications of digital technologies, business law, consumer protection law, and information law. I personally follow your LinkedIn quite actively because of the recency and immediacy of the content that you and the insights that you bring. I just want to check, Professor, are you there?
Yep, I'm just at a relatively loud place, so I'm just trying to find a quiet corner here. But yeah, I'm here, and thanks for having me join this project. I enjoyed working on it, and I like the whole project as a whole as well. And my chapter focused on children as investors, and basically what I focused on is something that I've been researching for quite some time now, and I've actually in a somewhat of a related theme just published a paper in Science magazine last week dealing with some of these issues, children investing in fintech and gamification, and how we should regulate this and figure out the best routes in terms of scientific evidence and the best way to go in terms of the financial markets and the financial services. And so the chapter really focuses exactly on this, the concept of you're expanding the clientele, and eventually a lot of the digital platforms and fintech platforms have reached the conclusion that why not try to introduce more clientele with the new audiences being children and youth. And so in my chapter, I sort of focused on that concept, talking about the types of financial services and the types of products that children are being offered, ranging from fractions of shares to some type of crypto products, business models such as play to earn, and all sorts of buy now, pay later themed services, and how these incorporate children as potential new audiences and what we should do about it. And I find this to be super fascinating because we obviously now know that children are using smart devices and tablets from basically diaper age, and we know that no one really uses money anymore. So children are exposed to digital money, whether it's virtual money playing in games that have no connection to the real world, to the actual loot boxes that we now see 18 countries in Europe have banned in the last year, and are addictive financial transactions. That's exactly how the legislators in some countries now refer to loot boxes, addictive mini financial transactions. And so I think there's a lot more to be said about this issue, but this chapter focused on some of these elements. And we see more and more children investing today, even through more traditional providers such as Fidelity or Schwartz, right? Not just necessarily the Schwabs and the Fidelity of the world, also got other banks to be involved. And it's not just fintech companies that are saying, hey, buy stocks with us, buy a fraction of Tesla with us. It's now even more traditional financial institutions. So I think this trend's going to continue growing, and with it needs to be some type of understanding that we need to focus on financial literacy, even though it's very difficult, and empirical studies have shown it's not that easy to do, because children use all sorts of money and financial services and products now, and are incorporated in this new system that we have. And so this was my contribution.
Thank you very much, Professor Nizan. President Cass, I would like to share with you that the publisher, also with the speakers who've contributed today, who contributed fascinating and valuable chapters to this collective project. Sir, I would like to share with you that the publisher has told me that they're putting special emphasis on this book, that they think this will be a lasting text on the subject. And so they're pushing it forward to the university libraries. I got this message. Sven, you may not know that, so good news for you to hear as well, that they want to put special emphasis on this. And sir, I would like to also comment that it's wonderful to have people who are at the cutting edge of their field. We have a nice balance of seniority and young people contributing to this project to get multiple perspectives from around the world to dissect a problem. So it's not just that we need to solve the problems of any one country, Pakistan or the United States. We work as a global community to solve the world's problems. And this is a strong example of that, sir. So I would like to invite President Cass for his concluding remarks to today's book launch. Sir, over to you.
Thank you. Thank you, Dr. Usman. Like always, we try to do things on time. To conclude things timely. Let me, at the onset, ladies and gentlemen, good morning, good afternoon, or good evening, wherever you are. I would like to congratulate all the authors who contributed to the book from different corners of the globe, and the two editors, once again not co-located, for the successful completion of the book. It is really very fascinating to be part of such a diverse group that has so keenly worked hard to put across their thoughts and subjects of common interest. It's very positive result of a collective effort, notably by the co-editors of that edited volume of more than 100,000 words by 14 authors from 5 continents and from various disciplines, has been realized within the required deadlines and to a high academic standard. In short, this short time, it is difficult to individually touch upon and appreciate all the authors one by one. So my personal thanks and appreciation for the splendid work done by all the authors. However, I like to, mention a special contribution of the two co-editors, because orchestrating a publication across the globe, where people are participating from different corners of the world, it cannot be so easy unless it is done professionally, meticulously, and with knowledge and authority. So therefore, my special appreciation for Dr. Usman and Dr. Sven, who co-edited this book. I just want to mention a few words about the two of them. Those who know Dr. Usman serves as an advisor on economic affairs and national development at the Center of Aerospace and Security Studies, commonly called as a premier research-based think tank. Dr. Usman is amongst the top 10 business authors out of 12,000 on the Social Science Research Network, commonly called SSRN, which is the largest repository of the knowledge in the world. Having authored 4 books in the last 4 years, his research work has been cited widely in WTO, EU Parliament, and National Bureau of Economic Research. Fluent in 7 languages, he's also president of International Association of HYPIA, which is Hyper. Dr.
Hyperpolyglot, sir.
I learned it today.
Jesus. Hypia, sir.
Hypia, the largest association of Hypia language speakers in the world. Well done, Dr. And Dr. Sven is an assistant professor in business and economics at the Brussels School of Governance, where he also serves as Vice Dean of Education. What a qualification. He's also a professor fellow at the UN University Institute on Comparative Regional Integration Studies, and is also a visiting scholar at Stanford University, USA. He has worked and published on functioning of the 2 international institutions and bodies such as WTO, IMF, EU, G7, and G20. So the project was definitely in safe hands to be completed on time. The book reflects, I actually tried to read this technical subject in the last few days. So I try to put across few points that I feel are relevant. Maybe the book reflects a high degree of originality and interdisciplinary effort where authors from different backgrounds offer their unique perspective around a common issue. In this case, the issue was the role of activist retail investors in modern financial markets. The perspectives included economics, sociology, law, information technology, cultural studies, public administration, and few others. The approach is very powerful in combining the use of multiple perspectives, and it is reflected in the richness of the book. Ladies and gentlemen, the financial markets are currently experiencing a great deal of volatility and uncertainty, with the role of activist retail investors continually coming into the limelight. For example, the recent run on the banks in the United States and Switzerland highlight how, irrespective of financial health, the financial institutions are vulnerable to public sentiment, particularly in the digital era of fast traveling news through social media. This gives an indication of the continued relevance of the topic at hand. Activists, retail investors to researchers around the world. At the end, I would like to once again thank and congratulate all the authors for the successful effort. We at the Center of Aerospace and Security Studies, an institutionally encourage collaboration with the brilliant minds all around the world. And I hope to see continued and robust academic collaboration of this kind amongst the CAS scholars with other scholars around the world. Very well done, each one of you, and my heartiest congratulations. Thank you very much, Dr. Chohan, for inviting me to this.
Thank you very much, sir. So, dear authors, people viewing this, President Cass, with your permission, we conclude this virtual book launch. Thank you for your participation. This video will be uploaded to Cass YouTube, and I'll share it with everybody accordingly. So thank you very much.
Thank you.
Take care.
Thank you, everyone.
Thank
Have
you.
a good day.
Thank you.
Usman. Bye, everyone.
Aslam.
Salam.